Welcome back. Well, the melt-up is resuming this morning. Take a look at futures indicating another rally at the start of trading this morning on this kickoff to third quarter earnings week. The Dow is up 83 right now. White House economic advisor Kevin Hassett is warning that federal layoffs may happen as the government shutdown enters day 6. Lawmakers are holding another vote tonight at 5:30, hoping to reach a deal to fund operations through November. Then they'll have to do it again. Gold rallying this morning toward $4,000 an ounce. Investors are piling into gold ETFs as well. Exchange-traded funds, they're looking at safety in commodities. Bitcoin also surging to a new all-time high, hitting $125,000. Take a look right now, just below that, both assets gaining as investors bet the Fed cuts rates at its upcoming policy meeting later this month. Joining me now is former Federal Reserve Board nominee and Independent Institute Senior Fellow, Judy Shelton. Judy, great to see you. Thank you so much for being here. What are your expectations for the Fed meeting later on this month in October?
Yeah, well, I think they're on a rate-cutting path, but basically I think the Fed comes across as being rudderless. They like to say that they're data-driven, but what we're finding out is the data is erratic and oftentimes misleading. There are huge revisions, which if they had had proper information at the time of a decision, the Fed might have had a different response to the data. And now the data is unavailable. So when the Fed says it's flying blind, that's almost laughable. And I think it brings up the hubris of thinking that a group of people in kind of a central planning way can manage this dynamic U.S. economy, when meanwhile, the markets are telling us something that the Fed doesn't understand. The markets are confident. They think the supply side agenda of the Trump administration, with lower taxes, less regulation, trade policy that encourages domestic production and lower energy costs, is fueling a transition to depending on private sector initiative. And we're looking at 3.8% growth or better. And I would go with the private sector market assessment over the Fed's view of the economy.
Yeah, markets tell a different story. And what's wrong with this picture? Actually, it feels pretty good. But yields are surging this morning, Judy. I'm wondering if you're getting a bump up in the 10-year this morning, the yield, because French yields are surging. You know, the yields in France are up because the prime minister resigned there in France. That's why the CAC 40 is plummeting as well. What's your take on yields now sitting at 4.16% on the 10-year? Fed Governor Stephen Miron pushing for a larger rate cut. He wants 50 basis points. He says he'll reassess his inflation outlook if housing costs move higher. He's pointing to stricter immigration policies, cooling rent trends as factors bringing housing inflation down. He also said his policy path is mostly in line with Fed colleagues, although he'd like to get there faster.
Well, the Fed has such a distortionary impact on the yield curve. I mean, right now, the Fed is paying through its administered rate, the rate it pays on the cash reserve balances of commercial banks, 4.15%. So that is the same as locking up your money in a 10-year Treasury bond. So something is really off. And then considering that the rate the Fed is paying is substantially higher than you would get on the 10-year French bond right now. So internationally, the Fed's policy is truly out of whack.
Wow, that is really a great comparison. You know, B of A, Global Research, Bank of America, is moving its Fed rate cut expectation now to October. They had been expecting a cut in December. They're talking about a softening labor market, warning the Fed risks over-easing as the shutdown delays key data. It expects just one more cut this year. They think it happens in October. Goldman and Morgan see 2 more cuts. And, of course, futures traders are pricing in a 96% chance of a quarter-point cut at the October 29th meeting. Liz Peek, jump in here because they're talking about 25 basis points. Stephen Miron says just get it done. Do 50 basis points.
Yeah, Judy, what I would respond to that is, does it even matter that much? Isn't it more important that there's more credit becoming available through the regional banks to small business? Isn't that where a lot of the energy is in the economy right now? Obviously, the consumer is driving the bus. But to your point, we're seeing better and better numbers, and I think it's spreading out through the economy. What do you think of that?
Well, I agree. And that's where the real growth, the kind of growth that actually results in expanded production of goods and more services provided comes through those small businesses. So I think it's a mistake for the Fed not to lower rates, because what you really want to do is expand access to capital. And that's the most important thing. So if the Fed starts cutting because they're worried about the job numbers, that's fine with me. But I don't think that's the right reason. Not when you have this kind of growth and you really don't have high unemployment. But let them cut using whatever justification they want. The important thing is that part of this transformation of the economy involves access to capital. So let's have borrowing rates be reasonable so that you can allow small and medium-sized businesses to expand plant and equipment and hire people. And it's the increased output that's your best way to fight inflation, not trying to curtail demand the way the Fed does through restrictive interest rates.
All great points. Let the market forces do the work. Judy, good to see you. Thank you so much.
Thanks,
Judy
Maria.
Shelton. All right, well, we'll see you soon, Judy.